Good morning and welcome to Daybreak Australia. I'm Shery Ahn in New York with Haidi Stroud-Watts in Sydney and Annabelle Droulers in Hong Kong. The top stories this hour. Markets set to give their verdict on the DPP's victory in Taiwan's presidential election, with analysts saying it removes some key uncertainties. We're live in Taipei for reaction. Reports of new U.S.-led strikes on Houthi rebels in Yemen, with money managers going long on higher prices for Brent crude. In global conflicts, AI and hopes for easier monetary policy all in focus as business, economic and political leaders head for Davos.
Well, Shery, Haidi, start of a new trading week here in Asia this morning. And at the start of the day, you can see here we're looking very range-bound, not too much movement so far, but putting it in the context of how we ended the end of last week. Wall Street shares mostly moving to the upside and traders still continuing to focus and recast their expectations around where the Fed goes, how aggressive they're likely to be with their rate cuts over the course of this year. That's one focus point. Of course, we've been keeping an eye over that over the past couple of weeks. It has really been playing into the dynamics of the yen, for instance, and you can see here continuing to hold around that 145 mark where it's been sitting for the past 5 sessions or so, really going to perhaps be tested as we look ahead to that BOJ meeting, though no change is really expected just as yet. What else is to note? You mentioned in the headlines there, Shery, it is that focus on geopolitics coming into it, and Taiwan certainly playing into that. We had the results of the election on the weekend. Traders, though, seeming that they're going to really, Shery, be going to taking this pretty much in their stride.
Yeah, we'll actually get the reaction right in Asia. Investors given their verdict on the election of Lai Ching-te as Taiwan's president when Asian markets begin opening in the coming hours. The DPP's victory also being seen as a blow to Chinese President Xi Jinping's strategy for the island. Lai secured the lowest winning percentage of votes since a similar three-way race in 2000.
We are telling the international community that between democracy and authoritarianism, we will stand on the side of democracy.
Joining us now from Taipei is Bloomberg Markets co-anchor Yvonne Mann. Yvonne, so how big of a win was this for the DPP?
Well, Shery, as you say, I mean, this is a historic win for the DPP, given that no party before has won 3 terms in a row. So certainly this is a milestone. And also, Lai Ching-te did win by a pretty comfortable margin as well. But, as you say, he only got 40% of that mandate as well. And that, as you say, is the lowest in terms of percentage of votes since 2000 when Chen Shui-bian won. And the DPP lost its overall majority in the parliament. So while voters did defy some of these China threats about this election being a matter of peace and war, voters did voice their dissatisfaction in these legislative ballots as well. You know, everything that from domestic issues like high housing prices, you have slow wage growth, also, you know, less job opportunities did turn a lot of young voters away. So without that clear mandate, we're talking about the DPP, leading a divided government now. They're going to have to cross party lines to try to negotiate to get any sort of budgets or legislation through, and that certainly should actually hurt the DPP's advancement of some of their agenda.
I mean, Beijing had already labeled Lai Ching-te an instigator of war, right? So what's been the reaction so far to this election victory then?
Yeah, Lai Ching-te is definitely is a leader that China would dislike very much so. And really, we've heard this leading up to the election. But so far, I have to say, the response from Beijing has been quite low key, right? And we got that statement from the Taiwan Affairs Office yesterday, and they reiterate their stance on reunification, but said that 40% mandate received by Lai, quote, could not represent the mainstream public opinion of the island, which is true, right? If you look at the votes that were tallied between the KMT and the main opposition party and the TPP, this is the third party newcomer, those votes combined was more than what the DPP had. So you got to wonder, had this coalition party among the opposition actually gone through, we would have been talking about a much different result here right now. So how Lai manages this dynamic is certainly going to be quite interesting in terms of, that was the statement which seemed to be a little bit more dovish in language. You remember 4 years ago when President Taiwan won that second term, we heard from Chinese state media labeling her as selfish, greedy, evil. This time around, they didn't even mention Lai's name in that statement. Militarily as well, it seemed like they're downplaying things. We've heard from the defense ministry here. They've seen 4 Chinese Navy vessels, 1 weather balloon fly over Taiwan yesterday. No PLA planes have been recorded near the air defense zone here in Taiwan as well. So no big show of military force like the sort of the scores of jets that we're used to here when dignitaries like Nancy Pelosi last year are here in town. And we have seen some signs of perhaps compromise. We heard in that victory speech with Lai Ching-te on Saturday, he reiterated that he wants to collaborate and cooperate with China. We also heard from President Biden in the U.S. yesterday after this election result saying that the U.S. does not support Taiwanese independence. So some of this language does seem to reassure some concerns among Beijing here right now. But so far, I would say a pretty low-key response from China.
Yvonne, tell us a little bit more about the Taiwan-Washington relationship, because, of course, we had the delegation of former top U.S. officials arriving already in Taiwan. What's this visit about?
Yeah, this is interesting, right? So obviously, everyone's going to be watching how this presidency is going to play out, right? If there's a divided government, does this mean that that the DPP doesn't have that strong mandate? Perhaps that's why you're seeing this sort of response from Beijing so far. But then again, yesterday we heard that this is a U.S. delegation of ex-U.S. senior officials that arrived in Taiwan. We're hearing that today they're going to be a meeting with the president-elect Lai Ching-te, as well as the vice president-elect Xiaobi Kim, the former Taiwan envoy to the U.S., I have to say as well. This is going to be led by the former Deputy Secretary of State James Steinberg and former National Security Advisor Stephen Hadley. So I think the fact that these are ex-officials perhaps might not be of relevance for Beijing in some ways, but certainly this is going to be a big test here on the U.S.-China relationship as well. But we'll see how this all plays out here as well. But so far, I think it's safe to say, now we're not seeing a huge sort of showing of military force from China. Maybe a couple of months, though, right? We've heard from Taiwan officials saying that they're expecting maybe once we get through this winter, we get to better weather, that we might see China ramping up the pressure here, whether it's militarily, economically, on Taiwan here, right before potentially the spring when Lai Ching-te takes office in May.
Bloomberg Markets co-anchor Yvonne Mann there joining us from very early and very dark there in Taipei. Let's actually discuss a little bit more about what this means in terms of the Beijing-Taipei relationship. Joining us now from Canberra is Jennifer Parker, adjunct fellow for naval studies at UNSW and an expert associate at the ANU's National Security College. Great to have you with us, Jennifer. Yvonne was just telling us about how the PLA has rather been a little bit restrained, at least when it came to just ahead of the elections. Could we see the pressure being ramped up now after Lai Ching-te takes office?
Look, good morning from Canberra, and thank you for having me. Look, China has been quite restrained, as just mentioned, compared to what we saw in the last 12 months, where we saw, record numbers of aircraft and naval vessels crossing the median line in the Taiwan Strait. That said, many Chinese officials in the lead up to this election talked about the fact that voting for the DPP was voting for war. So I think between now and the president's inauguration in May, we can expect to see increased activity from China. Whether this reaches the levels of the large naval and joint exercises conducted around the time of Nancy Pelosi's visit to Taiwan in 22, or in fact Lai Ching's visit to the US in August 23, yet to say, but I think we will see increased activity ramping up to May.
What's the most likely and dangerous scenario here when it comes to the Beijing-Taipei relationship?
Look, there has been a lot of discussion about the chances of an invasion or a blockade of Taiwan between now and, the late 2020s, 2030. My assessment is that at this stage, that is unlikely. I think the recent purges of the PLA rocket force shows that Xi does not have a high degree of confidence in the PLA at the moment. So I think that is unlikely, but increased coercion through military exercises in and around the Taiwan Strait, I think is the most likely course of action.
What does this mean for the Washington-Taipei relationship as well? Because if we continue to see the flare-ups around the Taiwan Strait and tensions really escalate, there could be a miscalculation from any side of this conflict.
Look, there certainly could be miscalculation, and not just in the Taiwan Strait. We have seen in the South China Sea as well a number of close calls between vessels. In June last year, we saw in the Taiwan Strait a Chinese destroyer cut directly in front of a US destroyer at a very close range. And it only takes one bit of poor seamanship or poor airmanship for those aircraft or those vessels to collide and have potential loss of life. So this is significantly dangerous. And I think that one of the good points is the agreement last year between Washington and Beijing to at least restart military-to-military communications. I think that'll be essential in de-escalating any of these potential incidents.
Talking about escalation, Jennifer, of course, we continue to see tensions in the Middle East as well, especially around the Red Sea, with the U.S. and the U.K. Launching attacks on Houthi targets in Yemen. Is this going to really widen into a broader conflict here?
Look, I don't think that the recent US-UK strikes on Houthi targets in Yemen will broaden into a wider conflict at the moment. I think it's clear from the actions from both Iran and the US that there is no desire to increase the conflict in the region. And the strikes did occur a couple of days ago, and we haven't seen a significant response, despite the fact that the Houthis have highlighted that they do intend to deliver a significant response. I think most likely, if the Houthis still have the capability to strike merchant shipping in the Red Sea, then we'll see that degree of response. Potentially other Iranian proxies in either Iraq or Syria attacking US bases, which we have seen before, potentially with drones. Or we might see Iranian interference with shipping in the Strait of Hormuz. But I don't think we will see a dramatic escalation in response to these strikes.
Tell us a little bit about Australian involvement here, because we know that they provided support as part of the mission of these attacks. What role can these third countries play?
Yes, well, Australia has actually had staff members in the Fifth Fleet, or NAV-CENTCOM, for over 20 years now. So Australia's staff members operating there assist in the planning of a number of exercises and operations conducted in the Middle East with Fifth Fleet. And so Australian planners have played a supporting role in the execution of these strikes. Well, the exact nature of that supporting role of Australian planners, Netherlands planners, Bahraini planners has not been made entirely clear, but certainly in the joint statement after the strike, it was clear that those countries are supportive of the US and UK actions.
Jennifer Parker, good to have you with us, adjunct fellow for naval studies at UNSW and an expert associate at the ANU's National Security College. And still ahead, we have more on Lai Ching-te's election as Taiwan's next leader, as Xi Jinping's strategy for the island suffers a setback. But up next, Kramer Capital Research tells us why they think the U.S. economy is slightly hotter than projected and what that means for the Fed's rate strategy. This is Bloomberg. You're watching Daybreak Australia. Let's take a look at the week ahead. In a couple of hours, the PBOC will announce its decision on the medium-term lending facility rate. The central bank has signaled it may deploy monetary policy and liquidity tools to boost economic growth. Later this week, we'll also be getting a snapshot of China's economic performance in 2023, with fourth quarter GDP data due, as well as other key indicators for December. On Wednesday, Bank Indonesia will unveil their latest rate decision, Bloomberg Economics expects the bank to stand pat as it hikes this cycle have been aimed at rupiah stability instead of cooling price pressures. Also on Friday, Japan inflation data might show consumer price gains slowing. We'll also watch for CPI prints from the Eurozone and the UK. Other data to note, GDP figures from Germany, PPI numbers from Japan, Australian jobs data, and TSMC earnings as well. Bloomberg will also be on the ground in Davos for this year's annual meeting of the World Economic Forum. Top world and business leaders, as well as central bank heads, will gather at the Swiss Mountain Resort to discuss the overarching theme of rebuilding trust amid, of course, that backdrop of geopolitical tensions. That's your week ahead. Our next guest says the U.S. economy is running slightly hotter than projected, and she's leaning neutral when it comes to markets. Hillary Kramer is CIO at Kramer Capital Research and joins us here in New York. Hillary, always great to have you with us. So when you say neutral, though, it's still slightly more constructive as you were at the end of 2023.
Yes, I'm still positive. I'm positive, but Shery, it has really to do with so much rotation into other stocks and some of the large investment houses finding opportunities in specific companies. It's not really going to be about the indices this year.
You were saying that the U.S. economy is still a little bit hotter than expected, and we are getting really conflicting data here and there, right? Whether it's the CPI numbers, or we also saw the PPI numbers actually surprising to the downside. It will be a bumpy road ahead. How do you invest?
The best way to invest is to find those undervalued stocks, the companies that still have a role, that are growing, that have a positive through the roof return on equity, to do a lot of macro investing, to look at companies that have specific reasons on the, again, macro side, why they're going to do well, like, for example, defense, aerospace, and I'm not including Boeing in there, but certainly the General Dynamics, Lockheed Martin, Textrons. I mean, these are stocks that were either down 1 or 2%, maybe up not even 1% in the past 12 months, when you can look at other stocks from Royal Caribbean up 130% to the NVIDIAs. So it's going to be about that rotation in areas that just have been unloved. And also even some of the pharmaceutical companies. Look at Bristol Myers, BMY. I mean, you just go back 20 years. Like, nothing seems to go right. That stock just doesn't seem to go anywhere. So that's really the only way, because the data, yes, it is so misleading and so really, it's really controversial in a way, because how can the Fed be talking about a trifecta of rate cuts on one hand, and then suddenly you see that, okay, well, we do have 20,000 jobs being lost at Citigroup that are real jobs. And then you say, well, maybe it is possible.
Traders are pricing in, 80% chance of a first rate cut in March already. But what that means is that we have seen really bond yields being pressured, which you would think would be really good news for some of those tech names that are not earning a profit just yet. You don't like big tech, though.
Big tech, it's just gotten too big. It's just worn out. It's in every single indices. I mean, there's going to be too much selling off of that. And if we have any bump in the road, the first stocks that are going to be sold off are the tech stocks that have really come back and done well. And I'm not just talking about the AI stocks. I mean, this is also, Alphabet, Alphabet, Meta, I mean, Apple, that really
Microsoft just topped Apple, didn't it? As the biggest
as the biggest market cap out there. And at a certain point, even though stocks that reach highs can reach higher highs. I mean, that's really the rule of investing. But so many investors say, but how high is high? When I'm up 250%, or if on Microsoft I'm up 300% in 5 years, maybe it's time to start cutting back on there and finding something where I can, have a double or a triple in the next quarter.
Banks don't think that they're going to be seeing higher highs. I mean, the biggest banks coming out last week, they're not really that positive on net interest income, not surprising given where the Fed is going.
They're not at all. And the banks have put themselves in their own conundrum because they've locked in, even though some do have outs, so to speak, but they've locked in these 5.25 rate, 12-month CD guaranteed rates. And then we're looking at the Fed starting to cut. We're seeing that, of course, net interest margins, are going to be really pressuring the banks. And the bank stocks have already come back. Like the regionals we've talked about for so many months now, which, finally came back enough that they were no longer a buy.
I mean, given what we saw in terms of the rally in U.S. stocks in the fourth quarter, how does this earnings season set us up for the rest of the year?
Well, that was incredible if you think those last 12 weeks, what the last 12 weeks of 2023 did. But we are set up on earnings. I think we should be fine because ultimately, it's become more of a game than ever before. It's like the pendulum has swung all the way back, finding a way, finding money there. And with these layoffs, even though you have billion-dollar, kind of monies set aside for severance, so to speak, they're able to stick that to the side, and the banks, for example, are able to show themselves, doing well enough. But I think that the credit quality is fine. We just have to realize that the world has changed and electric vehicles aren't the future. Too many companies are jumping into AI and using it as a buzzword, and that's not going to get us anywhere. The car companies are laying off. We've seen layoffs announced last week. And so it's just mixed data. And then, of course, oil, energy, which is really what determines our inflation rate. Those numbers are coming down.
I was at CES last week. It was all about AI. Every company talking about artificial intelligence. Hillary Kramer here, our Chief Investment Officer at Kramer Capital Research, joining us here in the New York studio on a very cold and snowy day. Thanks for coming in. You can get a roundup of all of the stories that you need to know to get your day going in today's edition of Daybreak. Terminal subscribers go to Daybigo. You can customize your settings so you only get the news on the industries and the assets that you care about. This is Bloomberg. You're watching Daybreak Australia. The top geopolitical stories that we're tracking right now. Ukrainian President Volodymyr Zelensky is said to be planning to meet with JP Morgan CEO Jamie Dimon at the World Economic Forum in Davos. Zelensky is seeking to replenish the country's coffers for its fight against Russia, with calls for help now being eclipsed by the Israel-Hamas conflict. JP Morgan has been advising Zelensky on attracting private capital for reconstruction projects. Zelensky is also set to make a public address at the WEF gathering. Houthi rebels in Yemen say U.S. and U.K. fighter jets have hit targets in the Red Sea province of Hodeida in fresh strikes on Sunday evening. Al Masirah TV, which is operated by the Iran-backed military group, reported the attacks. The U.S. and its allies have been bracing for a response after dozens of airstrikes on Houthi targets in Yemen since Friday. Coming up next, we take a closer look at the election results in Taiwan. This is Bloomberg.
We are telling the international community that between democracy and authoritarianism, we will stand on the side of democracy.
That was Taiwanese President-elect Lai Ching-te on his presidential victory. Our next guest says the U.S. and China find themselves at odds, not because of their disagreement over the status and future of Taiwan, but because of their incompatible visions of international order. With us now is Ming-Hsin Pei, professor of government at Claremont McKenna College and a Bloomberg opinion columnist. Also with us again is our markets co-anchor Yvonne Man in Taipei. Professor, thank you so much for joining us. I guess the first question here is your reaction to the election results.
Well, my reaction is that there was no surprise. Before the poll outcome became clear, most of us expected a split outcome. That is, the DPP, the Democratic Progressive Party, will keep the presidency but lose the legislature, and that's obviously now the situation. As far as China is concerned, I think China must be very disappointed at the outcome, but China also finds something to comfort itself with. That is, it had the new president is elected by a minority of voters, and the DPP does not have control of the legislature. So this is my reaction.
Professor, what do you make of the fact that China-friendly Kuomintang gained fewer seats than expected? And as you said, if Beijing is disappointed, how are you expecting them to express that frustration?
Yeah, I think they're trying to put the best spin on this so far, but at the same time, they're going to keep Mr. Lai, the new president, on a very tight leash. That is, they're not going to cut him any slack. If anything Mr. Lai does or says that upsets Beijing, they're going to come very hard on him. That does not mean that they're going to launch an official military attack, but they're just going to dial up the pressure.
Professor Pei, this seems like this was a missed opportunity for Beijing, especially given the fact that you tally the votes from the KMT and the TPP parties. They were actually bigger and more than the DPP in the vote that they got. I'm just wondering, what's going to be the strategy for China moving forward? It seems like these sort of military and economic sticks aren't working. Does this force them to sort of change gears here on how to better coexist with Taiwan now?
Yeah, I think what this election reveals is really the future landscape of Taiwanese politics. There are both good news and bad news. The bad news is that DPP will remain the largest party and is likely to win future presidential elections if the other two parties do not join forces. The good news is that there are a majority of the Taiwanese people who do have differences with the DPP. So for Beijing, the challenge in the future is how to tap into the so-called mainstream, the majority opinion of Taiwan. Unfortunately for Beijing, it does not really know how democratic politics works, and it does not have a lot of instruments at its disposal to influence domestic politics in Taiwan.
And it bodes the question of what is this Lai presidency going to look like? He has campaigned as the continuity candidate and maybe following a more cautious sort of way that President Taiwan had governed this island. Is this going to be more of Tsai 3.0, you think, Professor? Or do you think, Lai will try to pave his own path and be more provocative with Beijing?
It's really uncertain. I think there is a lot of pressure on Lai to be restrained, to be moderate, to be careful. But at the same time, I think his instinct is toward a much more confrontational stance toward Beijing, because that's how he became a DPP leader. At the same time, he is also at the mercy of what's going on in the US. That is, right now, the Biden administration is very careful about how to handle Taiwan. It wants to strike the proper balance of deterring China without provoking China. If there should be a change of administration in Washington, say 2025, and if some very hardline Republicans encourage Taiwan to be much more confrontational, then the dynamics could change very quickly.
I know, given that, of course, it's a very politically charged year here in the U.S. with presidential elections as well, right? How do you expect that to affect the relationship between Washington and Beijing, especially around some key issues like semiconductors that's so important for Taiwan?
Yeah, I think this year, in the next 12 months or so, China will be quite careful, because it does not do China any good to be aggressive, provocative in the election year in the U.S. But depending on who wins the White House next November, and then the new administration comes in next January, things could change if, say, Trump brings in a group of uber hawks on China into his administration.
And Professor Pei, does sticking to status quo in China mean that this can still avoid a conflict with Beijing in the longer term? Because I'm just wondering, just given the fact that China is dealing with its own domestic issues right now, does that actually force President Xi Jinping to be more or less aggressive towards Taiwan?
Yeah. I don't know how to sort of measure more or less aggressive, but I think the long-term strategy of China is very clear. As peaceful reunification becomes less and less probable or possible, China will now step up its military preparations. China always wants to have this as a backup option. Now, looking at this election, I think there will be more incentives or stronger demand in Beijing for preparing for an eventual military reunification with China, and that could be a tragedy. But right now, there's absolutely no evidence that in the next X number of years, China is going to take that fateful step.
Professor, it was really good to have your thoughts. Thank you very much for joining us. Min-Shin Pei, Claremont McKenna College, Professor of Government and Bloomberg Opinion columnist, together with our markets co-anchor, Yvonne Mann, as well. Let's stick with Taiwan and the election results for morning calls. Annabelle is tracking the reaction from traders. Bell, some say this could be a sort of a boost for markets, but then at the same time is keeping the status quo. So perhaps a lot of it already priced in?
Yeah, I think it's really just about sort of thinking we've got uncertainty, or rather that uncertainty has sort of been removed now for investors. And so local stocks, as you say, they're pretty much already priced in that income. You can see here the TAIEX, that's the line in white, and you can see that significant performance or outperformance we've seen versus the MSCI Asia Pacific Index, the line in blue, over the course of last year. So as you said, it's really about maintaining the status quo here. Goldman Sachs, one of those that we've been hearing that view from over the weekend as a reaction to the election result. If you change on now, take a look at what they're saying, because they're not really expecting any big changes to come through in economic, in cross-strait policy. Yes, they do expect geopolitical tensions with China to persist, but given they were already elevated, we've heard that willingness perhaps from the DPP to engage with Beijing. They're saying that any sort of economic ramifications from heightened geopolitical tensions could be limited, given already low levels of cross-strait activity. On net, though, on balance, not really expecting any sort of significant market moves following the polls over the weekend.
Especially perhaps given that the DPP did lose its majority of the legislature, there could be some compromise ahead, right? What are analysts saying?
Yeah, well, that's also what we're hearing here, is it's also about what it sort of signals for China in turn. Given that they did lose that majority there, we have heard, as I said, that more willingness to engage with Beijing. These are positives from at least a market's perspective, because it does just dial down the tensions to a degree. So Allspring Global Investments, they're saying that actually China can take some comfort or consolidation from that result. They are expecting, as I said, more balanced representation of partners, perhaps more dialogue off the back of it. Natixis as well, they have also weighed in on the outcome, and they're saying that it doesn't really change that longer-term trend of global de-risking. Taiwanese companies are still going to need to look for other investments abroad off the island, and also that Taiwan is going to continue decoupling from China, given the US is still the biggest client of export orders. Shery.
Right, Belle, we'll be watching that market open in Taiwan and the reaction to the elections. We have more to come on Daybreak Australia. This is Bloomberg. Major U.S. lenders wrote off more of their commercial property loans as remote work and higher interest rates pummel valuations of office space. According to earnings releases, net charge-offs at Bank of America and Wells Fargo rose during the fourth quarter, partly due to office loans. Bloomberg has learned that Apple is shutting its 121-person AI team in San Diego, leaving many employees at risk of dismissal. Sources say the group has until the end of February to decide whether they want to relocate to Austin, where they would merge with the Texas portion of the same team. The AI unit is responsible for improving Apple's smart assistant, Siri. BlackRock has agreed to buy Global Infrastructure Partners for about $12.5 billion. The move vaults the world's biggest money manager into the top ranks of investors that make long-term bets on energy, transportation, as well as digital infrastructure. BlackRock will pay $3 billion of cash and about 12 million shares. The deal is expected to close in the third quarter. Now, BlackRock clients jumped into the firm's long-term funds in the fourth quarter, helping push the firm's total assets to over $10 trillion. But BlackRock CEO Larry Fink also told us there are still signs of uncertainty in the market.
I can't control one quarter or another, and we had an incredible quarter. But the fact that stands out for me is over 5 years, clients rewarded BlackRock with $1.9 trillion. This is not market movement. This is how much new money we receive from clients worldwide. So clients have, over the long run, have great needs to put money to work. We advocate only long-term strategies. We advocate that you need to be in the market. You can't be in and out of the market. If you're looking to do that, there are many venues where you could be doing that. We are trying to help people build retirement savings. We want people to have a life in retirement with dignity. We spend so much time in our world talking about how we could have healthier lives, but we spend no time focused on, can we afford that longevity? And BlackRock is a firm that tries to provide that type of long-termism. I do believe we spend a great deal of time talking about hope in a world today where we have greater hatred and greater fear. I think there are many opportunities to think about, despite all those issues, that long-term investing is the way to go. And I believe, you know, at the moment right now we have trillions of dollars money sitting in a money market funds, and so that's just an indication of fear. We have more money sitting in bank balance sheets right now and deposits. That's an indication of fear or uncertainty. And I do believe one of the greatest differentials between U.S. and any country in the world is the strength of the U.S. capital markets. And this is something that we at BlackRock betted on years and years ago that we believe in. And so over time, we believe the opportunity to invest in our economy, investing in our companies, and at times when you want to have a more global view, investing in the world, over a long run, you're going to outperform any bank deposit. You're going to outperform any money market fund. And it's our job to provide the appropriate investments for our clients so they can have that life with dignity.
The form that those investments are taking is changing. And you also announced a sort of a new architecture, I guess is what you're calling it, for BlackRock, really pushing on to ETFs. You've had a lot of success with iShares already. It's grown. It looks like you're doubling down on that. Explain that move into ETFs. How far does it go?
When we bought BGI in 2009, we were ridiculed by most of the financial community saying you cannot marry the culture of an active investor, who we were, and a passive culture. And we said, why? Our clients use both products. Our job is to be agnostic to our clients, to work with our clients, to provide a whole portfolio solution. But over time, more and more clients started to think about, how do I want to get an exposure? Do I want an exposure in this area or this product? And I could do that through actively investing in ETFs. In 2012, we said, ETFs are going to be the new engine for fixed income. And boy, did that get a lot of ridicule by many people in the business community. And today, the fixed income markets are totally imbued by ETFs. And so at BlackRock, when we bought BGI, we had $290 billion of ETFs. Today, we have $3.5 trillion.
BlackRock CEO Larry Fink speaking with Bloomberg's David Weston. And if you missed any part of that conversation, TV Go is your function. You can watch past interviews, also watch us live. You can dive into any of the securities or Bloomberg functions that we talk about. Also become part of the conversation by sending us instant messages during our shows. This is for terminal subscribers only. Check it out at TV Go. This is Bloomberg. You're watching Daybreak Australia. The surprise decline in U.S. producer prices last week reinforced bets on Fed rate cuts this year. That data came a day after hotter than expected CPI reading as well. Bloomberg opinion columnist Mohamed El-Erian is expecting U.S. CPI to get stuck at 3% due to fresh cost push pressures. He also told us why he sees growth risks ahead for the U.S. and other major economies.
My major concern is that if you look at the three systemically important regions in the world, economically, the Eurozone, the US, and China, all three are having issues growing in a robust manner. The US is the exception there, but even the US now is facing lower household savings, higher debt. China needs to fundamentally change its economic models, and we know that without a healthy Germany, Europe is going to struggle. So if you actually look at who is the locomotive of growth, it's very hard to point to one locomotive. It's hard to believe that the US will be able to maintain what was very impressive growth rates. Now, put on top of that the geopolitical concerns, and that's why this recency bias, where people simply extrapolate what was a surprisingly good year from last year, is something that we have to guard against.
So you're questioning the resilient growth story. Are you also questioning the disinflationary trends, Mohamed, that have started to develop over the last 12 months?
Yeah, I smiled when I heard the conversation before I came on, that, it's disinflation ahead. It's not. We're going to see, and we already are seeing, cost push pressures in the pipeline. There's two in particular. What's happened to navigation in the Red Sea is directly and indirectly increasing inflationary pressures, directly by hiking input prices, indirectly by causing shortages that then influence other prices. And then we have the labor market issue. We have higher labor costs coming through the pipeline. So you've got cost push pressures coming in. I suspect we will see inflation at the CPI level get stuck at 3%. And then the Fed is going to have to make a difficult decision, either tolerate it for longer, and I was encouraged by John Williams' use of the word, a longer-term inflation target is 2%, or try to reduce it to 2% too quickly and risk the real economy. But this notion that immaculate disinflation is going to continue is something that I find very hard to reconcile with actual data.
Let's finish on Fed policy. Expectations, they go in March. What's your gauge of what the threshold is to begin to reduce interest rates, and how close do you think we are to it?
There's no reason they should go in March. I think the market is over-optimistic, both in terms of timing and in terms of the amount of cuts we're going to get. I think the market should listen to the Fed when it says signals around 325 basis point cuts and starting later than March. I think it'll be the summer when they start.
Bloomberg opinion columnist and University of Cambridge Queen's College President Mohamed El-Erian speaking to Bloomberg's Jonathan Farrow. And it's that time of year again. We have economic, financial, and business leaders gathering in Switzerland for the World Economic Forum. The theme this time is rebuilding trust. Here's a look at the main issues set to dominate discussions.
White alpine mountains, billionaires, and the global elite. It can only be Davos, the tiny ski resort in Switzerland, home to the annual meeting of the World Economic Forum. Here are three key topics high on the agenda. Number one, a dovish pivot. Despite all the talk of higher for longer, sticky inflation, and robust labor markets, investors are now pricing in aggressive rate cuts by key central banks this year. Following the cost of living crisis and the unprecedented cycle of global monetary tightening, reduced borrowing costs cannot come soon enough for debt-strapped companies and governments. And the next crucial question is whether policymakers can make the pivot to avoid a hard economic landing. 2. Rising geopolitical pressure. World leaders were already grappling with the Russian invasion of Ukraine, launched by Putin's forces nearly 2 years ago. The much-anticipated counteroffensive by Kyiv hasn't quite gone to plan, and foreign support and military aid is not flowing as freely. There's now also a second conflict on the global stage between Israel and Hamas. The humanitarian cost has been immense, and the war has the potential to spark wider tensions across the Middle East with ramifications for global trade. And 3, just 2 letters, AI. Investors are obsessed with its potential to disrupt chunks of the economy, and it drove some of the biggest stock market gains last year. Pressure is now mounting on tech companies to deliver on some of the earnings hope. And in the hallways of power, security, and ethical concerns remain. The EU struck a landmark agreement to regulate artificial intelligence, and it could set the tone for similar rules by governments across the globe.
Of course, Davos draws a lot of criticism as being exclusive and out of touch with reality. But key politicians and industry titans continue to go in droves. And as long as they do, the buzz will remain, along with the potential for meaningful change.
Bloomberg's Francine Lacqua there with a preview of what to expect in Davos. Coming up in the next hour, Oxford Economics shares their outlook on China's economy ahead of this week's major data releases, of course. Vanda Insights also tells us why the oil supply-demand outlook remains bearish. We had a little bit of upside when it came to oil prices, given the U.S. and its allies launching airstrikes against Houthi rebels in Yemen. That's it for Daybreak Australia. Daybreak Asia is next. This is Bloomberg.